It's Blake with Trade Tracer. Welcome to the Market Report. In this week's video, I'm going to get you prepared for next week. As always, none of this is financial advice. Always invest and trade at your own risk. Make sure you go ahead and hit that like and subscribe if you find this content valuable, and click the links in the description for some free signals. All right, so let's go ahead and get started. You guys know I have been watching the NASDAQ simply because the NASDAQ has been the leader. I like to watch the leaders, so I would like to touch on the SPY briefly today, but you guys know my focus has been the NASDAQ because it's leading, and we like to trade the stocks that lead. We like to trade relative strength. So the NASDAQ closed in no trend on Friday, which is very significant because we entered a downtrend on September 4th, and we were in this downtrend for 14 days, 14 trading days, okay? So that's quite a while. It's 3 weeks. So we've been preserving capital, cash, and year-to-date gains while this market has digested this pullback. And on Friday, we finally got our first signal to go ahead and dip our toes in the water for a potential long entry. Now, on Friday, we had a phenomenal day trade that I wound up holding because I never had any reason to get out of the trade. So we're actually long back from this candle on Friday on the Qs. So 266 roughly was our entry alerted to members. So we had a phenomenal entry, and we never had really any reason to get out of this trade. So we're still swing long from 266 area, and we are holding for a potential uptrend. Now, obviously, you're going to have your stops in place. You know, you got to put your stop at a level you're comfortable at. Obviously, you want to lock in gains, but this could be a phenomenal entry provided on Monday we have some strength. And if we can get above the September 22nd high, which was, let's see, the high was 273.08. If we can get above that level on the QQQ, that would be price strength confirmation, and that will get me long this market with a little bit of confidence. Now, one thing I do want to note is we are coming up on an election. All right, this easy trading back here, when we just go up every single day, the easy money is over. All right, now we're getting into some more volatile trading. It's towards the end of the year. We could potentially see the end of quarter window dressing, what they call window dressing. What it basically is a scenario where fund managers like to show on their books to their clients that they've been in the winning trades in the stocks that have been leading. So if this does happen, and this is complete, speculation, obviously trade price, but price is telling us we do have rules to go ahead and get long. So we have a couple things that are aligning here, right? We have price that's aligning long, and then we also have the end of quarter window dressing. And like I said, it's when fund managers want to show that their clients that they've been in the winning trades. So what have been the winning trades? Well, like I said on Friday, if you follow us, I said we're going to need to be keeping a very close eye on Apple and also Amazon if we want to have any chance of this market rebounding higher. And the reason that I said that was because these two stocks have been the leaders. And if the market is going to go higher, I believe it will be led by these two, especially since these are the big name stocks that fund managers want to show their clients that, yes, you're absolutely invested in Amazon, Betty and Bonnie. You know, you guys absolutely are invested in Apple. It's been phenomenal this year. You're doing great. So that's what could potentially happen. All right. So I just want to put that out there. I want to put it on the table, make it aware of to everybody to know this is going on in the background. Okay, so we do have price back above 10 SMA. We have MACD curling, and theoretically we do have a break of this downtrend. So we do have rules to trade long. Now I would like to see the NASDAQ show some more strength above some key levels, as you guys know. But this is constructive. This is the first constructive sign that we've seen in the market since the past 15 trading days. Okay, so that's a very positive sign. Now, I want to go ahead and zoom out and show you what I'm seeing on the weekly time frame. Now, the weekly time frame is the time frame that I utilize for the investment account. So those of you that follow and you're part of the premium service, you know that the service is broken down into two separate segments. The first segment being designed for your average investor, the person who doesn't really want to trade, the person who wants to make sure that their portfolio is invested the right way and doesn't really care too much about trading, but knows that they want to be invested in the market. Well, that's what I call the investment portfolio. And every day I send a picture of screenshot of my portfolio allocation. So those that want to try to mirror and trace my trades, hence Trade Tracer, can go ahead and mirror that same allocation and theoretically have the same or very close to the same return in their portfolio over the long term. So there's that aspect. That's what I use for this. So this is the weekly time frame. And then on top of that, I also have the alerts segment as well. So that's more towards the day traders and also the swing traders, where I constantly am giving a market analysis and entries and exits on my personal trades throughout the day in the Telegram channel. If you're interested in that, make sure you go ahead and check out the website. Send me a message. Happy to help. So on the weekly time frame, the NASDAQ is closing below this 10-period moving average. Now, you guys know when that happens, we go into what I classify as no trend on the weekly time frame. So right now, from an investment perspective, this is a no trend. You can see the MACD has crossed. We're below the 10 MA. So what does that tell you? That tells you that over the weekly time frame, the momentum is slowing and turning down. So if we compound that with the daily, and the daily, right, is just breaking above this 10 SMA and starting to get some legs underneath itself, I don't know if I can trust the strength of this rally, right? If we rally, I don't know if I can trust the strength of it. For one, because we don't have a MACD bull cross, and on the weekly time frame, right, you got to know where you're at in the trend. And on the weekly time frame, we're breaking trend. Okay, so I just laid it out there that we could see, the end of quarter window dressing, totally on the table. But I want you to understand that this isn't set up on the higher time frame, on the longer time frame. It's not set up to just bounce and rally back to new all-time highs and then further. That's just not the setup that we're in right now on the longer term trend. So that's what I talk about. Know where you are in the trend, and you got to know which time frame you're trading. But on the daily time frame, we do have our first signs of a positive signal. So just keep that on the table. Always have an open mind. You should not go into the market. You should not go into your trading day knowing exactly I'm going to get long or I'm going to get short. You definitely need to have an idea of where you are in the market. And yes, you need to plan your trades. But things change, and that's why you always need to keep an open mind. And if price changes or something dramatic happens in the market, you need to be able to shift and change your thesis and be nimble and adaptive within the market, because the market is constantly moving. It's constantly fluid. You have to be fluid with it. Okay, so that's pretty much what I had for you guys today. I wanted to make sure that we touched base on the potential of a quarter end markup, but also understand where we are at in the higher time frames. On the weekly time frames, the trend is changing, the momentum is slowing. So even if we do get some rallies back up here, be careful, because we don't have that weekly time frame alignment, and we still don't have that MACD cross on the daily. And one thing that I do definitely want to note here is these anchored VWAPs. So these are some of my favorite moving average / volume / time tools to analyze the market. And what it does is it combines price, volume, where shares have traded hands, and over the course of time, so from a specific point in time. So you can see I've anchored this from the all-time high that we put in on September 2nd. And from then, if I break this down even to a quicker time frame instead of a daily, I like to utilize the 65-minute chart, because you can see just how much sellers have respected this moving average. So you can see it when we looked like we wanted to break out here. That's precisely where buyers got trapped and sellers came back into control. And now we're putting in this W formation on the 65-minute chart, setting up for a rally into Monday to potentially this area of interest. Okay, so that 275.80 level, that's going to be a very key level that we're watching for Monday. All right, so keep a very close eye on this previous all-time high anchored VWAP from September 2nd. If we can get above this, that's very constructive, because it tells me that buyers have regained control from these sellers that got in from the top up here. Okay, so I just wanted to put that on the table. If you guys like this content, make sure you like it. Make sure you hit the subscribe button. Check out the details in the description. I'm always here to help. You guys have a great weekend.